Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Wednesday, and we're at the 10th of May, 2023, and we're sitting here now at 6 p.m. Central Time. So we got the CPI number, and what an interesting number. The headline falls to 4.9%, but core sits absolutely still at 5.5%. The Fed's favorite is the core, not the headline number. The market's favorite is the headline number because it says, look we were at 9-something% inflation. We've cut it in half. We're headed down to 4% now. So they get bullish and they buy this market. That's what's basically going on. Now, tomorrow you're going to get the PPI numbers. And on the PPI, we'll see just where those come in. Do they do anything? But the die cast is there already. And what is the die cast doing? The die is saying that the naysayers, because of today's action, and the market was everywhere, down a lot, coming back a lot. We'll see that in a minute. They are going to continue to say, no. The Fed will never be able to keep going with the quarter-point hikes. You've got a trajectory where that headline is starting to fall. The jobs aren't gaining the way they were. So we'll also have to look tomorrow at unemployment claims, which are expected to be fresh at 245,000, about 3,000 more than they were last week. They'll put that together and they'll decide what their next plan of action is. When we look at the S&P for the week, you are flat. We're already into Thursday's trade. For the week, you're up 0.11%. Come on, you haven't gone anywhere. You were everywhere today. Need I say more than that? I mean everywhere. If you and I step back here, and we should, let's see if I can get this to step back one day, if it'll let me do it. Doesn't seem to want to. There we go. Now it's going to do it. Look at the range. You got to 41.12 to 41.73. That's 60 points. It's a heck of a lot. It was everywhere in it. But at the end of the day, it wins. It's got what's called an outside day up. If you've taken my course on outside days, you start looking at this and you look at the next part and you say, we have higher lows. We have a higher high. Today, that high did take out 41.63. So until today's low is taken out, you're back in an uptrend. I agree with that. Where is the battle? Do you see the line in the sand that I'm laughing? Because I've been saying this market's fighting a battle at the 18-day average for direction. It's exactly what's happening. You're not at a Bollinger Bands, which I don't have here. I'll show it on the next chart. You're just caught here. You're not able to drop enough to get to the 100 in green or the 200-day average. You're stuck right there. The Bollinger Band, each time you've hit it, you found the support against the market. Bollinger Bands are just so darn important. And as you made your run, you didn't quite hit it. You just missed that number. Okay. But you have to argue that the trend is up and momentum is flat to higher. So I say that the pros are buying the market. Stops have to be, as I see it, under today's low, looking to see if they can drive the market back to these highs. PPI will help or hurt in the morning. If you take out today's low, the way I teach charting, if that's taken out, the odds are you're going to go down to that Bollinger Band before you go back through today's high. You don't have to go through today's low. I'm just saying if it were taken out. Who's got control as I'm recording? The bulls do. As we take a look at the micro mini NASDAQ, you tell me where the market went to and what did it run into? The brick wall at the Bollinger Band. Again, such an important number with the overbought condition. You owe it to yourself for your trading to learn how to work with these and the momentum at the same time. They're just so darn important. In the Dow, you've got flat momentum. You have no trend. You made a higher high, a lower low. You have an outside day down. The battleground, even though you keep exceeding it, has been the 100-day average. Today you made a probe all the way down. If we come here, and you'll see, we got as low as 33,298. The Bollinger Band was at 33,265. It just missed it. And the market was able to come back now. And it's just fighting its battle at that 100-day average. Are we trending? We are not. The micro Russell. The weakest of the markets flipped into a market today that negated the downtrend. Why? Let's get rid of today's action. You can't argue that you had lower highs, lower lows. You had gotten oversold. You had hit the Bollinger Bands that's where the pros came out of the market, in my opinion. Now, if you take out that high right through here, and that high would have been Monday's high, and that number would have been, just so we can get it, 1776, Independence time, 1776. And if the market clears that, which it did, what's the pattern? Suddenly it becomes higher highs, higher lows. Now at the close today, the market didn't close over that 18-day average. So it's given the swing line up, but it kept the bias down, and you're fighting tonight right at that number. I don't think anybody has control just yet. If the market breaks through 1741.40, this was just noise in the market, a rally that culminated. It couldn't go anywhere from the 18-day average, but it cannot restart a bear trend. It can extend the bullishness up here, but it can't that. The question is, can it even close over the 18-day average? When you get to the T-bond market, I have been telling you in these videos, hey, folks, take a look. That 100-day average is a battleground of fighting. It is. It continues to be with the 18-day. While you've got the trend up here, you got higher lows and higher highs, you don't seem to want to move away from that 18-day average. It's like it's waiting for the other shoe. Maybe it's the PPI number. What's been stronger are the 5-year notes, surprisingly. And that means yields have been falling here. You have higher lows. You have higher highs. And while the market's lower tonight, what a battleground that was all day long. Because at first you were adding, then subtracting, then adding yield, subtracting again. It was a battle. And you see it in the size of the range that the market had for the day. It's not small. It was 110.17 to 109.25. So you were just shy of a full point in the market. That's a lot. You don't typically get those. You get them every now and then, but not every day. And it's interesting what that did. So who's winning going home? The bulls are, which means lower rates temporarily. You got higher lows, higher highs. So the pros, I think, will step in and buy in this 109 area. Stops, they got it where? Now that becomes the big question. So let's backtrack here and see where the stop's got to be. It's got to be 109.23. Right through there. They're going to have a tight stop as can be on that market. In the dollar index, you're just drifting sideways in a market that can't make up its mind should it be bullish or bearish. It doesn't get a pattern where it keeps going one way or the other. In the eurocurrency, you've been in a downtrend, but you're already oversold. I don't see on this pattern in any manner how to get bullish. I also, because you are now already at numbers that are falling pretty hard here. I don't know why they don't have a number on today's, but they don't, which is interesting as can be. Let's see if they had it yesterday on this. Yeah. I don't know why the math didn't come through yet, but that's not me. It's got to be something in the charting software. In the British pound, no, you've been hitting the Bollinger Band almost every other day. So that's pushing on it, bullish. Do we have an embedded reading? What's an embedded reading anyways? You got to learn to work with that. You can't count tonight, but we can go and say, all right, we had both numbers over 80 at the close of business Wednesday, right? When we come to Tuesday, both numbers over 80. Not that way on Monday. Well, you need 3 days in a row over 80 on a closing basis to embed, which converts overbought to being locked in. If you're down tomorrow and that red line's under 80, you lose the embedded reading and it says the market might want to roll back to the 18-day average. You're at a real touch and go spot in this market. The bulls have control going into the Bank of England decision as of this point. When we look at Bitcoin, you got down, made your run today to the Bollinger Band. I'm laughing about it because it just happens so often. And I know what I do during the day if I have positions in stocks, whatever, and I use these bands all the time. When you look at Brent versus WTI, as I said to you the past few days, the market got over that 18-day average. So Brent's a bit stronger than WTI. You lost an embedded reading, and the market is trying, in my opinion, to get back to the 18-day average of close. Same here. And then when we take a look at gasoline, when we lost that, I told you, and I wrote it in my market report, look for this market to make a run to the 18-day average or thereabouts. I think it's done it. I think we're there. And natural gas, still in the bear camp. We're going to get a set of natural gas numbers tomorrow. They're looking for a build of about 75 billion cubic feet. So you look at all this, you put it together, you try to say to yourself, which way are we going? You hit these bands, how do you play with them? Let me teach you. It's the course. It's going to give you the morning videos, my subscriber videos. The charting software comes with it. It's video course. I think there's 15 chapters. You see what I do. You do the same thing. And then I instill it in you every morning. And suddenly you go, whoa, now I know why markets sometimes stop. And I haven't been able to see why. And now when they stop, if they're embedded, do I come out of my whole position? Do I stay? What do I do? How do I know if it's embedded? You're going to learn the whole thing. How? Watch this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.